Could the collapsing Toronto and Vancouver condo market cause major problems for the big Canadian banks? Well, I think you're going to be surprised at what's going on, and we can see what effect it might have on those banks. So let's take a look at what's happening with the condo market so you can get an idea of what's going on. So essentially, the average sales price right now in Toronto for a condo is 705,659, which is just an insane amount for a condo where your maintenance fee is going to probably cost somewhere between $600 to $1,500 a month on top of what you're going to have to pay for a mortgage for a place that costs $705,000. Just absolutely mind-boggling how anybody would invest at these prices and with inflation where it is. But anyways, so the transactions have tanked, so nobody is investing really. It's really probably, unfortunately, only the dumb money that is coming in right now at the end. Annual change, sales are down 53%. So they are down substantially over last year, and they're down substantially over 2020 as well. 2020 transactions were at practically 2,200. And then in December 2021, they were at 2,000, a little bit less. And then this year, they've completely halved. So it really is, demand has just completely fallen off a cliff, as you can see in that chart. So the liquidity in the market has completely dried up. And real estate isn't liquid anyway, let alone when you're talking about condos. And then you're getting more and more illiquid, essentially, as you go further down the rabbit hole with condos. So essentially, record number of condos to flood the market in 2023 in Toronto. So a record number of new condo units will be completed in Toronto in 2023, just as skyrocketing mortgage rates make it harder for investors to close on their properties. Nearly 32,000 condos will hit the city and surrounding suburbs, according to data from condo research firm Urbanation Inc. That surpasses the previous high in 2020 when 22,473 units were completed. Wow. So you're talking about over a 30% increase of the previous high of the amount of condos that are going to hit the market this year, supposedly anyways, because you've got to remember that a lot of these developers naively are probably going to think, well, let's try and delay this as much as possible in the hopes that, number one, interest rates come down so their buyers can qualify, and number two, prices go back up so that the appraisals are like their buyers are able to qualify because of the appraisals, essentially, which is just like trying to catch a falling knife. And a lot of what's going on in the condo market is starting to remind me of China, actually, what happened in their condo market and is still happening in their condo market. Obviously, there are major differences between the two, but essentially you've still got all these developers that are leveraged. They are taking out loans to finance these projects, and obviously they come due at some point, and with high interest rates as well, I'm sure that is impacting developers as well. So you have to think about that, and then think about the value of the bank's assets. You know, if the banks have got all these loans on their balance sheet, and the chances of those loans being paid back is going down and down and down, then the value of those loans is also decreasing, even though that they will say that the value is obviously increasing. But the reality is that's just not the case. They will say the value is increasing because interest rates are rising, making the loans more valuable. But the reality is, to me and to you probably, you think of it in the logical way, which is that there's less chance of those loans being paid back. And this is how people can't get their head around how there could be a banking crisis or a liquidity crisis in a place like Canada. These markets are massive. Toronto and Vancouver markets are huge. They account for a huge amount of the loan and asset growth that are on Canadian banks' balance sheets, because they go and buy in other cities and in other places in Canada too. Like we saw in 2020, you had loads of buyers going to Halifax, and that continued into 2021. And then you had buyers in Calgary and Edmonton from Ontario too. They were all over trying to buy up the real estate, and that's what sent the prices just skyrocketing. So Toronto and Vancouver market, it has more of an effect on the overall market than people might actually think. So the raft of units are coming on the market after jumps in interest rates have ramped up borrowing costs and led to a drop in real estate sales and home prices. Now, many buyers are having problems qualifying for a mortgage, with 5-year interest rates topping 5%, as well as lenders are appraising units at low prices. So that's basically what we just talked about. Then it talks about the financing arrangements. So pre-construction condos which have not yet been built are mostly bought by investors who plan to rent their units and or profit from a resale. To secure a pre-construction condo, a 20% down payment is required. And after the condo has been built, the buyer is required to pay the remaining 80%. So essentially, you've had people buying and they just put 20% down, so they haven't paid for it. Then they come to complete on the condo and they're trying to get their appraisal, and the bank's saying, hey, it's worth $100,000 less than when you purchased it a year ago because you purchased at the top of the bubble. They don't have the money to complete on that, and then not only that, even though they're in breach of their terms and they could be sued, if there's enough of them, enough people in different developments that are doing that, it makes it very difficult for the developers. The amount of money that they would have to spend on legal fees alone, and the time that it would take to recoup the money that they would need, would just take a long time. And then the other problem is, they can't just sell it to the market because there's nobody who really wants to buy it on the market too. So they're in they're just in this terrible predicament really, where essentially the condo market is just looking like a train wreck because, you know, and I've always said this, you know, condos are like a Ponzi scheme essentially, because think about it. If you buy a condo, you're going to be paying what, like $1,000 a month maintenance fee on one of these condos with a pool, a gym, you know, all these different amenities that you might have, and you're going to be paying for them, obviously. But the thing is, when you purchase it, that maintenance fee is at the lowest price it's ever going to be. It only goes up from there, and people don't realize that. So if inflation is really running at 10-20% per year, no matter what the CPI is doing, your condo fees are going up at 10-20% per year, which people can't afford. So condos are a very dangerous investment, and that's just my opinion. I just think there's so many risks when you are buying a condo that people don't really think about. And the first thing I think about when I'm thinking about anything financial is, what are the risks? But people think the opposite. They are like, what am I going to make from this? What is my profit going to be? And then they look at the risks after, but by then they're just totally biased from the amount that they think they're going to make in profit. They just gloss over the risks in a lot of cases, or don't even think about them. And you've also got the Airbnb side of things that I want to show you here, just so you can kind of see the density. If you look at where mostly the condos are, which is in this area in downtown Toronto. I used to live in Toronto. Obviously, there's lots of condos down here too. There's condos all over the place, but they are particularly dense in this area here. And you can see the amount of Airbnb units is just off the charts. And when you look at them, 68% right up here on the right-hand side are entire homes and apartments. So they're essentially condos. So you've got tons and tons of Airbnbs and short-term rentals. So if you're sat in a condo that you're renting right now, Well, I actually think the probability of your rent going up is very, very low, and the probability of your rent coming down is very, very high because of this. Because in a recession, what sort of occupancy rate are they going to be running? The occupancy rate is going to collapse. It's already collapsing in different cities all over the US and Canada. If you look at AirDNA's data, you can see it. So it's just a matter of time before that hits in Toronto. It may have already hit, and then it's just a question of how long before they start flipping these over to long-term rentals or trying to sell them. But once again, this is a huge problem for mostly the condo market, because it's mostly condominiums that are on Airbnb. So, the condo market in Toronto looks like a complete disaster. And the banks are in there, they're financing all these massive projects, and there's a record amount of them, as we found out from the data from the Globe and Mail and that Urbanation company. We know that there's a record amount of projects going on, so we know there's a record amount that the banks have financed. So are the developers going to go bust? Like, are the banks going to get paid? What is going to happen? Because it just looks like a complete train wreck right now, and piecing it all together, I just do not see a scenario where this goes well, apart from if they drop interest rates right down to the floor again, and then they just start increasing everybody's income through stimulus checks. But I don't think we're going to see that type of wide stimulus that we saw in 2020 again, because they're going to be worried about inflation. And it was really things like the Canada wage subsidy that impacted the real estate market a lot, not the actual CERB checks, the CERB checks. So anyway, I thank you so much for watching. If you liked this video and enjoyed it, you might like that one there. You might also like that one there. And I will see you guys in the next one. Take care of yourselves. Bye-bye.